Hello, everyone. Hope all is well. I'm Adam Bergman, tax attorney, founder of IRA Financial. In today's video, I'm going to chat about the best ways to buy real estate in an IRA. So this will be a primer video. I'm going to go through the different types of self-directed IRAs. I'm going to talk about why you want to buy real estate in an IRA, and then talk about some of the pitfalls that you could potentially fall into if you don't understand and have someone that can help you navigate all the IRS rules. But for the most part, buying real estate in an IRA is super easy. It's probably the most popular alternative asset class out there for alternative asset investments. I'd say probably 65 to 70% of my clients are invested in some form of real estate with their IRA, whether it's real estate, hard asset, a home, commercial, residential, whether it's raw land, or maybe it's a real estate fund, or even a real estate note. So let's start at the basics, okay? The term self-directed IRA, you're not going to find it anywhere in the tax code. Not going to find it. It's simply a term. You can call a self-directed IRA a checkbook IRA, a control IRA, whatever you want. But essentially what it is an IRA that lets you invest in alternative asset investments. So you're probably thinking then, why can't I just do this at Schwab or Fidelity? Why do you even exist? Well, the traditional financial institutions don't make money when you buy real estate. That's why they don't let you do it. They can if they want to, but it doesn't really have much of a benefit or offer them any economic incentive. So they don't. And that's why they restrict you when you open an IRA with them to simply buy the products they sell, which can't blame them. I would do the same thing, right? They're a business. They're not a charity. So when IRAs were created in 1974, the self-directed IRA industry was born at the same time as the regular old IRA industry. We simply offer options to investors that want to invest their IRA in alternative assets. Now, the IRS doesn't say what you can invest in, only what you cannot invest in. You may think, hey, these rules are probably super complex. They're not. They're super easy. There's only three things you can't do in an IRA. You can't buy life insurance. You can't buy collectibles like antiques, rugs, stamps, baseball cards. There's an exemption, a carve out for pure precious metals, pure gold, silver, palladium, bullion, 99% finesse, or American Eagle coins, state minted or bullion coins, but they must be held in the physical possession of a U.S. depository. Can't hold them at home. And thirdly, outlined in Internal Revenue Code, Section 4975, you can engage in a transaction with your IRA that in any way, directly or indirectly, personally benefits you or your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. You can't buy a house and live in it. You can't take your IRA, go on a vacation in Hawaii. You can't take your IRA and buy yourself a Rolex watch. Can't take your IRA and pay for your kids' rent. The IRA investment must be done to exclusively 100% benefit your IRA. So if your IRA invests in a piece of real estate, and maybe it's a vacation home or Airbnb, and you rent it out to a third party, and all the rental income goes back to the IRA, then of course that's permitted, right? That's not benefiting Adam Bergman individually. My IRA is benefiting, which is the whole point of this, but I'm not 1 cent richer. I only become richer when I take a distribution from my IRA. But so long as all the investment income rolls back to the IRA, it's tax deferred or tax free in the case of a Roth. So any type of IRA can set up a self-directed IRA, a traditional IRA, a Roth IRA, a SEP IRA, a simple IRA, doesn't matter. Okay, the structure is the same, whether you use a Roth or an IRA or a SEP, doesn't matter. There are two types of self-directed IRA. So before I get into the different ways to buy real estate, you probably have been told by a traditional institution that, hey, you can open up an IRA at TD or Schwab or Fidelity, and it's self-directed, right? You can make your own investment choices. Well, yes and no. Of course, you can choose what stocks you buy or what mutual funds you select, but you really, in essence, don't have a true self-directed IRA. Why? Because you can't do anything other than what that brokerage firm or investment house sells. Can't buy real estate, can't buy gold, can't buy cryptos, can't do non-publicly traded securities, right? Essentially, the big banks and financial institutions will only let you invest in publicly traded assets like stocks, mutual funds, ETFs, bonds, annuities, things like that, where they can make money on. So over the years, and I've been in the self-directed IRA industry about 13 years or so, alternative assets have gotten a lot more popular. When I first started this business, people looked at me funny, saying, really, you let people put real estate in their IRA? That seems quite aggressive. You should be buying stocks or mutual funds. Well, more and more over the years, and specifically the last 2 or 3 years, more and more Americans have said, hey, buying real estate, number one, will give me more diversification. I won't have all my investment assets in one asset class. I want to diversify, right? If the markets drop 30 or 40%, as they are in 2022, I'm diversified. I'm going to have some money in stocks and mutual funds, but I'm also going to have some money in alternative assets like real estate, hard assets or gold, or maybe hard money loans, something to diversify. Number two, a lot of people want to invest in what they understand. Not everyone understands how Wall Street works. Why is Netflix down 75% this year? Why is Apple down 25% this year? Why are all the oil and gas companies up tremendously this year? Not everyone understands this stuff, okay? And some people just want to sleep better at night. Say, hey, I have this home. I'm getting $1,200 a month, coming back to my IRA without tax. The home is appreciating. I don't have to worry about the stock market and interest rates and who the president is and who Congress is and the Democrats, Republicans, and all these hearings. I don't care. I'm always going to be able to find a renter for my home. And I'm going to get cash flow that's going to go back to my IRA, kind of like an annuity. But unlike an annuity, which stays flat, the home will hopefully appreciate over time, which it has obviously in the last 2 or 3 years when real estate's been up 40 or 50%. Another reason why people want to buy real estate in IRA is a hedge against inflation. Real estate's a hard asset, right? Treasury just announced, the Fed just announced that inflation is at a 4-decade high, 9.1%. They just announced that today, 9.1%. That's crazy. I have not seen that in my lifetime. Okay, I don't remember it. I guess in the early 80s, interest rates were way higher than they are today, but I was just a kid. So I, like many Americans, are not used to dealing with or addressing a higher interest rate environment. Now, real estate generally does well in higher interest rate environments. Why? Asset values go up. As inflation increases, so should the asset values. And you have flexibility, right? Most rental arrangements are 1, 2, or 3 years. So as interest rates go up, you can increase your rent. So you have a lot of flexibility. So in all, that is why you want to invest in real estate and why millions and millions of Americans have elected to use their IRA to invest in real estate. So now let's talk about how the heck you invest in real estate with an IRA. So there's basically 2 ways, and I'll try to map it out. My handwriting isn't great. That's why I went to law school. So the most traditional way is called a regular old self-directed IRA, okay? So the way that works is pretty simple, right? You're going to have money that's going to be transferred, right, to IRA Financial Trust, okay? So you're going to have tax-free rollover or transfer. A transfer occurs when the money's going from the IRA. A rollover occurs when it's going from a 401k, but it's the same thing. You can go direct transfers or rollovers anytime you want, unlimited, okay? And there's no tax. So whether you're transferring from an IRA or you're rolling over from a 401k or 403b or 457b, it's all tax-free. Now, once the money hits IRA Financial, okay, now all you need to do is simply tell IRA Financial what to do with the money. So remember, this is a self-directed account. IRA Financial does not make investment decisions. We're not investment advisors. We do not make money selling products. We don't take any fees or commissions from what you buy. We are simply a self-directed IRA custodian that will custody your asset and do all the IRS administration / reporting. Okay, so you're in control. So the beauty of IRA Financial, one of the beauties obviously, is we have a great app. And with this app, you can onboard on your own. You simply need to answer some basic questions, upload a license, upload a statement to show that you have an IRA or 401k. We'll open your account within a day or so. You'll be notified. If it's a transfer, we will initiate the transfer. So IRA Financial will actually pull the money from Fidelity, Schwab, Vanguard, wherever it's coming from. We'll notify you, of course, when the money hits. And then once the money hits, you need to just go into our app and tell us where to send the money, right? So if you're buying real estate, you're going to upload some purchase documentation that we will sign on your behalf. So title would be in the name of IRA Financial Trust Company for the benefit of the Adam Bergman IRA. And the money will go from Vanguard, let's say, or Fidelity to IRA Financial Trust. You will then notify us, tell us where to send the money. The money will then get sent to the real estate deal. Okay. And then as part of that real estate deal, the money will be sent to the seller. The title will be a name IRA Financial Trust Company for the benefit of the Adam Bergman IRA. And this way, all the income and gains will flow back to the IRA without tax. Super simple. A couple things to remember here. IRA Financial is the owner of the real estate for the benefit of the IRA owner. So any expenses, any fees, anything that goes out of the IRA needs to be paid by the IRA, right? Because you don't own the real estate. The IRA does. So that means taxes or paying a contractor or any related expenses to that real estate need to be paid by the IRA. So you're just going to need to go into our app, complete an expense pay form and say, hey, write a check to $100 for Joe Smith to fix our toilet, whatever it is. Or to the state of Florida for taxes. And that's it. It's super simple. And this structure, the traditional self-directed IRA, is probably the most common. It's used in almost any type of alternative asset investments. If you're doing private placements, hard money loans, investing in private businesses, gold, even cryptos. Why this is easy is because it's really just one step, right? Rollover and then investment. Well, maybe two steps, but that's it. Title's in the name of the IRA. And if you're not doing a lot of transactions, let's say you're investing in an investment fund and there's a 5-year lockup or a 3-year lockup, or you're investing in your friend's business, it's kind of a startup, so you may not see any returns for a few years, then this structure works great. Why? Because you don't need a lot of control. You as the IRA owner don't really need to be involved in the process. Why? Because once the money has been sent from the IRA to the ultimate investment, it's done, right? The money's being used. Hopefully the asset's growing in value or the business is performing well. And then ultimately, let's say the business or real estate is sold. The income and gains from that asset will go back to the IRA without tax. And then when it comes back to IRA Financial Trust, then you have the options. You can reinvest it in another alternative asset, or you can tell IRA Financial, hey, you know what? I want to diversify. I want to put some money back into Schwab or Fidelity. No problem. Okay, you just fill out a transfer form and we'll transfer it out to wherever you need to send it tax-free. So it's a really great structure. It's used for real estate investments where there's not a lot of activity. Okay, so if you're doing real estate funds or maybe a hard money loan fund or raw land, or even if you're just buying one rental property where you don't think there'll be a lot of activity, maybe you have a management company that's just going to send you or ACH the money back to IRA Financial, excuse me, then this structure works really well. But if you want to have a little bit more control, okay, there's something called the checkbook control structure. And checkbook control structure was created back in essentially 1996, okay? Why? 1996 is a Swanson v. Commissioner tax court case. And this is the first case that said that an IRA could wholly own an entity and be managed by the IRA owner. Okay, prior to that, there was a little bit of uncertainty is that, hey, if an LLC is created or a corporation and it's funded with IRA money, so it's wholly owned by the IRA, can it be managed by the IRA owner? And Swanson was the first case that said, yes, it can be. Why? Because the entity only becomes disqualified once it's funded. So once Swanson occurred, and what's going on at the same time is limited liability companies are gaining popularity. Prior to the early 90s, most people that started companies would do corps or S corps. People weren't really comfortable with limited liability companies. Okay, it's kind of a new type of entity. Yes, every state recognized LLCs by the mid-90s, but LLCs really just came into existence in the 70s. Okay, so it was only about 15 or so years old. So there was still a little bit of apprehension from investors, business owners to set up LLCs. So that's why most set up C or S corps. But by the mid-90s, people were getting more comfortable with LLCs. Why do people like LLCs? Well, let's look at a corporation. Okay, think of a corp as a big box. Okay, it has a corporate level tax and a shareholder level tax. So there's two levels of taxes for a corporation. So assuming a 21% corporate tax rate, the corporation makes $100, pays $21 tax, $79 left. And then there's a dividend. So that's how you send money from a corporation to the owners. That's called a dividend. And dividends are then taxed at the individual level. So that makes two levels of taxes. Yes, corporations do have limited liability protection, which is great, which is what business owners and investors want. Why? What does limited liability protection do? Protects your assets outside of the entity. So anything in the entity is subject to attack. Anything outside the entity is protected generally, so long as you can't pierce the corporate veil, which is quite difficult to do. So if you look at an LLC, think of an LLC, I kind of draw it as a triangle, but think of it as like a funnel, okay? There is no entity level tax at the LLC level. There is a member tax or shareholder tax, but that's a one set of tax. That's not two taxes. So go back to our example. An LLC earns $100. The LLC doesn't pay tax at the entity level. So there's only one tax. The member or owner pays tax. Okay, so in that case, let's say it's a 21% tax at the entity and shareholder level. In a corporation, there's 21% on the 100, so that's 79, and then there's 21% on the 79, which will take you into the 60s. Whereas if you did the same arrangement through an LLC, you're only going to pay one tax. At the owner level, 21. So you'll be left with 79, which is going to be more than the 60 or so you have at the corporate level. So LLCs are become more popular than corporations. S corps are still used quite frequently. S corps have one layer tax. They're kind of a corporation that has pass-through tax treatment. But interesting enough, IRAs cannot own S corps. That's an S corp rule. That's found under 1362 or 63 of the code. It's nothing to do with IRAs. It's an S corp rule. Only individuals, a 401k, a single member LLC could essentially be a shareholder of an S corp. Don't ask me why. Those are S corp strange rules. It's also limited to 100 shareholders and no foreign shareholders. So what happened in the 90s? Swanson happened. LLCs started getting more popular. Real estate investors said, hey, how about this? Let me have instead of having my IRA go to IRA Financial Trust, right? And go to the real estate directly. Let's have an LLC in the middle, right? Let's have the IRA gets transferred tax-free to IRA Financial Trust. Instead of it going all the way to the real estate, like in the first self-directed IRA structure, let's have it go to the LLC, okay? That's called checkbook control. Why would you do that? Number one, you have limited liability protection, right? Remember I mentioned LLC gives you limited liability protection. If you're a real estate investor, that's important to you. Why? Because let's say you have $400,000 in your IRA with us and you have $200,000 in your real estate deal. God forbid there's some issue, you don't have enough insurance to cover the liability, bang. They could potentially go after the rest of your IRA money. Yes, you're probably saying, well, Adam, there's an easy workaround. Set up multiple LLCs for each investment. You're right, you could do that. That will solve the issue. But remember, you still need the LLC. So the LLC gives you limited liability protection, which is great. Number two, it's also going to give you control. Why? Because I'm the manager. Yeah, I'm better looking than that, but you get the point. I'm the manager, okay? So that means I have checkbook control, meaning if I have to write a check to Joe, the contractor, or the plumber, or I need to pay taxes to the state of Florida or New York, guess what? I do it as the manager. I don't need IRA Financial Trust to do it, which takes time, even though we are great and fast. It is slower than just writing a check or doing a wire from my bank account. And best of all, we have a great partnership with Capital One, so we will open the bank account for your LLC. You don't even need to step into a bank and deal with all the nonsense of opening a bank account. So we will take care of that for you. So let's do an example. Let's say Adam has 100K at Fidelity, and I'm dying to buy a piece of real estate in, let's pick a state, I don't know, Texas, okay? So I have two choices, right? I can send the money, I go in the app, I get an account set up, IRA Financial transfers the funds tax-free from Fidelity to IRA Financial. I then go on the app, I fill out an investment authorization form, and I have two choices. I could say send the money to Joe Smith, the seller of the real estate at 123 Apple Street, or I can have IRA Financial set up an LLC in Texas, okay? And our one-time setup fee actually includes the LLC fee. So I have IRA Financial set up the LLC, they'll set up the operating agreement, which shows the IRA as the owner, shows me as the manager. They'll get me a tax ID number, all taken care of. They'll get me a bank account at Capital One. Then the money will go to the LLC. And then from there, I write the check to the closing escrow agent. Title, and this is important, title is not in the name of the IRA. So it's not an IRA Financial Trust Company for the benefit of Adam Bergman. Title is in the name of the LLC. Okay, why is that important? Well, number one, it gives you some privacy. Okay, so not everyone knows that your IRA owns it, right? Because you can call your LLC anything you want, so long as the name is available. So there's a layer of privacy. If you want an extra layer of privacy, you can set up your LLC in a state like Delaware or Wyoming, which make it even more difficult to find out who the ultimate owner is. So let's say you were really focused on privacy, and we do this quite often for clients. We'll form the LLC in Delaware, and then you can register it to do business in Texas, for example, or simply just buy it directly or have the real estate directly in the Delaware LLC, although you technically should file to do business in that state. Why? Because most states will deem you to be in a business if you own real estate in that state. So that's why if you set up an LLC in Delaware and you own real estate in New Hampshire, you should have that Delaware LLC filed to do business in New Hampshire. You don't need to, it's a very simple process that we can do for you, but that's the best way to avail yourself of limited liability protection in that state, is making sure that you are registered as an LLC in that state. So again, going back to my example, the 100K goes from Fidelity to IRA Financial. I have two choices. I can send it directly to the seller, or I can use an LLC, giving me limited liability protection, giving me privacy, giving me checkbook control as the manager. And then I, Adam Bergman, write the check on behalf of the LLC to the seller, and the real estate's titled in the name of the LLC, not the IRA. Any rental income gains go back to the LLC, right? Which gives me more control over those funds. Once in the LLC bank account, I could then use it for other investments. I just have more control over it, versus if the money went directly to IRA Financial, as a custodian, I'd have less control and I'd have to go through IRA Financial every time I needed to pay an expense related to that IRA investment. So LLCs are super popular if you're going to do a lot of transactions in your real estate. Fix and flips, you just want more control, you want privacy, limited liability protection. I'd say 70% of our clients do the LLC for real estate. But on the flip side, if you're just doing a real estate fund, or you're doing like a piece of land or a one-off deal, the LLC is not necessary. You could do it. There's no right or wrong. People always ask me, hey, Adam, should I set up the LLC? There's no right or wrong. It's really based off your preference. If money is no option, then yeah, you don't lose anything with the LLC. The only thing it does cost is the setup fee. And some states have an annual filing fee, which can go anywhere from like $0 to California, which is $800. Most states are between $50 and $200. So not an enormous amount of money, but it is a cost. Okay. So if money is not an issue, I think the LLC works. Now, let's talk about some of the pitfalls. Okay. We now know you have two ways to buy real estate with an IRA. You can do a self-directed IRA, or you can do a self-directed IRA LLC with the checkbook control. Two terms you need to understand. The first are the prohibited transaction rules, which I mentioned. And let's focus on 4975. You don't have to worry about life insurance, collectibles, and real estate, right? It's not going to be an issue. But 4975, you want to be careful if you are investing in an entity where you or a lineal descendant owns more than 50% of that entity. That could be a problem because 4975C will deem an entity controlled 50% or more by disqualified people, you or your lineal descendants, as prohibited. So you can't invest in a real estate fund that you control or your family lineally controls. But what happens if you want to do a joint venture, right? Let's say maybe you and your spouse's IRA, your friend's IRA want to do that. That's fine. 2 IRAs can go in. IRAs at this point are not disqualified. The individual is, but not the IRA itself. So you can commingle and do joint IRA deals. What happens about you? What if I want to put in 100K personally and my IRA wants to put in 100K? Can I do it? Well, this is a gray area. And in our industry, we've gone back and forth on whether this is prohibited or not. The safest approach, obviously, is don't do it, right? Because anytime you commingle IRA and personal funds in one transaction, you always open the window potentially to IRS attack. But the concept is, hey, if you fund an LLC with personal money and IRA money at the same time, remember, Swanson says the entity only becomes disqualified after it's funded. So if the IRA puts in 100 and I put in 100, only at that point does the entity just become disqualified. So technically you can do it, but you need to make sure you do not add any more money to that structure. That structure needs to hold, okay? And then you want to make sure that the profits get allocated equally pro rata to the IRA and the individual. That could work. Now, it's obviously riskier than not doing a joint venture, but technically it's seemingly workable. Now, brothers, sisters, aunts, uncles, cousins, friends are all good. They're not disqualified. Second term you need to worry about if you're doing real estate, and this is a big one, this 4-letter word. Yeah, it's a 4-letter word. It's an ugly word. It's called UBIT or UBTI. Okay. I hate this term. It's not fair. It should not apply to IRAs or 401ks. Unrelated business income tax, just real quick, was put in the tax code to basically stop businesses like McDonald's from setting up charities and never paying tax when they sell fries and burgers. Okay, so they said, hey, if you're a charity and you make money from a non-exempt purpose, an unrelated exempt purpose, so you're a hospital, if you make money selling flowers or selling bicycles, we're going to treat you as a business and tax you. Makes sense, right? But unfortunately, IRAs and 401k, they're treated, I should say, they're not taxed. They're treated as 501 trusts. They don't pay tax, just like a charity does not pay tax. So unfortunately, because they're treated as a 501 trust, they're subject to the UBIT and UBTI rules, which suck. Why do they suck? Because it imposes a 37% tax on a potential portion of the income related to the investment. The good news is UBIT or UBTI does not apply to most investments done by a retirement account. There's only 3 instances that UBIT will apply. 1, use margin by stock, leverage, non-recourse leverage. Number 2, use a non-recourse loan to buy real estate. Why do I say non-recourse? Because the IRS does not allow you to personally guarantee an obligation of your IRA. That means you cannot personally guarantee the loan. That's why the loan must be non-recourse, okay? Yes, you're gonna have to probably put a little bit more down, and you will probably pay a higher interest rate because the lender is taking a higher level of risk, but it's possible. And then thirdly, if your IRA invests in an active trade or business, like a restaurant or bar, through an LLC, not a corp, but an LLC, okay? Why? If you may be saying, Adam, holy cow, I'm in trouble. I own Tesla and Apple and Google stock. I never heard of UBIT. Oh my God, am I going to go to jail? No. 99.9% of all publicly traded companies are corporations. C Corps, remember, a big box. It boxes in the income. There is no UBIT on corps. UBIT only applies if the IRA invests in a business that's a pass-through entity, an LLC or partnership. Okay, so 3 instances: non-recourse loan to buy stock, non-recourse loan to buy real estate. Your IRA invests in an active trade or business, like a restaurant, through an LLC. The UBIT tax rate is high. It's 37%, and it comes quick. It's around 15 or 16K. You're going to hit that maximum tax. So for real estate investors, let's focus on real estate. Right? A lot of real estate investors like to use leverage. Who doesn't, right? Everyone wants to use other people's money. Leverage is king. So if you're going to put 10% down of IRA money and borrow 90%, it's a lot of leverage. That means that could be a lot of UBIT. Example, you put 100K in your IRA, you borrow 900K non-recourse loan. It's $1 million. Let's say you generate 100K of net rental income after expenses, after depreciation, after loan payments, and the like. That means 90% 100K will be subject to UBIT, right? That reflects the debt finance portion of the transaction. Yes, it will come down as you pay off the loan, but if your loan is outstanding within 12 months of a sale, that capital gain real estate sale will also be subject to UBIT. Okay, so UBIT, as I mentioned, it's an ugly 4-letter word, and it really hurts real estate investors. So you got to be cautious, and you have to understand the rules. How do you block UBIT? A couple ways. One is a C Corp, right? I can set up a C Corp blocker that can block UBIT, but I'm not going to eliminate the tax. I'm simply going to reduce the 37% tax down to 21%. It's not going to go from 37 to 0, but it's going to go from 37 to 21. Good, not great. Other thing is I can not do the deal, right? I can use personal funds, not IRA funds. Thirdly, if it's an equity investment, let's say I'm investing in a restaurant and it's going to trigger UBIT because it's an LLC, I can lend the money to the restaurant instead of invest. But when you lend money, you get a return, stated return as interest, but you don't get the upside. Right? When you own equity in a venture or business, if that business is sold, you get the upside. Whereas a loan, maybe it's more stable or secure, but you're not getting the upside. You're just getting a rate of return. The final potential solution for real estate investors, and listen up, this could help you, is something called a solo 401k. Solo 401k is a 401k plan that is designed specifically for someone that's self-employed. Okay, so if you have any self-employed income, you don't have to be a full-time job. You could sell Nikes on eBay or Adidas on eBay, or you can sell t-shirts on Etsy, or you can drive for Uber or Lyft, or you can do DoorDash, you can tutor, or I have a client that's a Santa Claus, makes a couple grand each year. If you have a little bit of income, you can set up a solo K. It could be a Schedule C, single member LLC, sole proprietor, C Corp, S Corp. And that solo 401k could buy the real estate. And the solo 401k is an exemption under 514C9 that allows the 401k to use a non-recourse loan to buy real estate without triggering UBIT. Let me repeat that. When an IRA, if you use an IRA and a non-recourse loan to buy real estate, and there's more than $1,000 in net income, you're going to pay UBIT tax. But if you use a 401k to do that same transaction and use a non-recourse loan to buy real estate, there's more than $1,000 in net income, 514C9 will block and exempt that income from the UBIT tax. So you can imagine that is huge, right? Because now you can super leverage up your transaction so long as you can get the leverage and not pay any tax on it. So that really starts things moving and gets people excited. I don't get as excited as some real estate investors, but when I tell some real estate investors this, they just are doing cartwheels because now they get potential tax-free or tax-deferred income. They can leverage up the investment and they pay no tax on their gains or income. Okay. So you need to get into the solo. Not everyone can do it, right? If you're self-employed or you're retired, if you're not self-employed, excuse me, you have no self-employment income or you're retired or Social Security, disabled, whatever, it may not work for you. But again, your side business does not have to be the next Google or Apple. It could just be you tutor kids in the neighborhood and make $1,000 a year, or you do some consulting, or you are Santa Claus, or you ride for a Lyft. You just need something to show you're a business, to set up the solo K. Roll your money tax-free into the solo K, have the solo 401k borrow the money, buy the real estate, and use a whole lot of leverage. It still needs to be a non-recourse loan, but you get around the UBIT tax. So that, in a nutshell, are the ways you could buy real estate, or the best ways, I should say, you could buy real estate with an IRA. Just to recap, I went through why people want to buy real estate with your IRA, besides diversification and hedge against inflation, invest what you want. Tax deferral, tax-free growth in the Roth, right? All your income goes back to your IRA without tax. That's known as compounding returns. Albert Einstein coined the eighth wonder of the world, right? Your money should double every 8 years, assuming an 8% rate of return. So that's why we know people want to buy real estate. Many good reasons. Two ways to do it: regular old self-directed IRA or the LLC. LLC is great if you want limited liability protection, privacy, checkbook control. You don't need the LLC. It's not required. It's helpful and useful if you are going to do a lot of transactions, or you just want limited liability protection, or just like having privacy and control, but not necessary. Pitfalls. Remember the prohibited transaction rules. Don't invest in any fund that you or a lineal descendant own more than 50% of. If you're doing a joint venture, fund together. Be careful, okay? Once you fund, you don't want to add more money to that venture. And then UBIT, that ugly four-letter word, UBTI, or unrelated business income tax, that could apply on many real estate deals. Any deal involving leverage that's a pass-through, or even if it's not leverage, if it's a real estate deal with an LLC and that activity rises to a trade or business, like a real estate development company, could trigger UBIT. In the case of real estate, it's usually the leverage that's the killer, right? Because if it's a real estate development company, they're going to have leverage. So it's very rare to invest in a real estate fund with no leverage. It's unheard of. Even Gates or Buffett or any rich guy is going to use leverage, even if they don't have to. Why not? Why not use other people's money? You just have more buying power when you borrow. So that's the key. How do you get around it? Blocker Corp, C Corp blocker. Some big funds will set up offshore blockers like in Cayman. And this way you don't have to pay the 21% tax. You can set up an offshore blocker in Cayman and then invest through Cayman into the US fund. Now, if you're doing a small fund, the cost of setting up a foreign blocker just may not make sense, but a lot of the big funds will have foreign blockers that you can use. Other than that, how do you get around it? Don't do the deal. Use personal money, non-IRA. If you can get into a solo 401k, if you're self-employed, if you have a small business, no employees, and the 514c9 of the code will let you circumvent the UBTI rules and use leverage to buy real estate without triggering that huge UBIT tax. The UBIT is filed on a 990T, which is due April 15th. The IRA pays the tax, not you. The good news with UBIT is you get to take into account your pro rata share of expenses, depreciation. So most real estate deals have losses in the beginning years, and you can use those losses to offset future years of income. Now, you can also play around with the way you pay down your debt. In some cases, you should be able to kind of pay more than you have to in order to wipe out your profits. Why would you do that? You want to pay down the loan as quick as possible so that you have under $1,000 in net income and you have no UBIT. Get that loan paid off so when you sell the property, no loan outstanding and you don't have to deal with UBIT. Okay, so there you go. Buying real estate in an IRA is not hard. IRA Financial makes it as easy as can be with our app, our education, our expertise. We help you throughout the whole process. We'll help you navigate the rules. We'll make sure you are in the most efficient structure. So we have people. We have an amazing team of people. You can call us. We actually have a phone, right? How many people, how many companies now? You can't even get anyone on the phone. Some of these new fintech companies, they have $6 billion valuations and they don't have a phone number. We're not like that. We want to talk to you. If you have questions, you call us. We'll help you. We'll navigate the rules for you. We'll get you into the best structure. What's going on now with 9.1% inflation? I'm seeing a lot of people open up accounts. The good news, IRA Financial, is you can open up an account, not pay us anything. You only pay us when you fund it. We have a flat $360 a year fee for our self-directed IRA account. no wire fees. Yeah, no wire fees, no check fees, no asset fees, no transaction fees, nothing. It's a flat fee. If you want us to set up the LLC, we'll set up for you. It's a one-time fee of $999. We generally offer discounts as well. And we cover that LLCs. So the LLC established fee is part of that $999. So we're not really making much. We're just being able to offer you the LLC service. We'll set up the operating agreement, set up the tax ID number, help you open a bank account at Capital One. We'll take care of everything. We've been doing this 12 years. We have over 24,000 clients. We're $3.5 billion in assets. We wrote the book on the Self-Directed IRA. I've written 8 books. This is what I do. This is my passion. And I promise we will do everything we can to make the process as easy, efficient, and smooth. So you get your money in your self-directed IRA as quick as possible. So then you can take control of your IRA or 401k funds and invest in what you want, all from one platform at one low flat fee. So that's what we're about. Number one thing is education. I'll be the first to tell you, hey, and this happens quite often. An investor will call in, want to do a real estate deal, mention UBIT, and we'll be honest and say, you know what, it just may not make sense to do the deal. Do personal funds. UBIT's going to kill your deal. And we rather have customers that are happy, even if they don't become customers, doesn't matter. Because ultimately what happens is they respect the fact that we're transparent, honest, and we want what's best for them. And ultimately they come back anyways because they find an investment that works for them, that will not trigger UBIT or a prohibited transaction rule. So we've been doing this 12 years. We want to do it for another 32 years. This is what we do. We think we're the best at it. And real estate is a great asset, to own an IRA, and I've seen it. And if you do want to learn more about it, let us know. We'd love to help you out. And it's something that I think you can learn a lot about, and could be even potentially rewarding from an investment standpoint. Plus, the whole concept of investment diversification. So thank you for watching. This was like a long one. I'm sorry about that. I just get carried away when there's, when real estate and helping people find the best structure. That's kind of what I love doing. So appreciate you guys watching. If you have questions, let us know. You can email it at info@IRA Financial. Check out our website, irafinancialgroup.com. Just give us a call. Otherwise, have a great day and take care.